Really nice to see you today, Ferdinand. I'm pouring through some of the charts in your report as well. Tell you what, why don't you start off by telling us what the highlights were, and then we'll dig into it in more detail. Nice to see you, sir.
Yes, thanks for having me this morning. Yes, you already alluded to it. A good finish to the year, 397 million in net profit, supported by continued high net interest income and also strong fees across all client segments, both compared to the same quarter the year previous, up more than 10%. And that resulted in an overall net profit of 2.4 billion for the full year and an ROE above 10%. If you look underlying cost, you see good cost control because we ended in line with our overall guidance of 5.3 billion. You do see some pickup in the second half of the year, but that was as expected on the back of hiring and a new collective labor agreement mid-year. Impairments, I think the good credit quality, and it was another year, the third year in a row, of almost no impairments, overall a net release. And then if you look at our overall capital ratio, Core Tier 1, it increased by 40 basis points to 14.5%, and we do expect the Basel IV to be reported in Q1 to be at similar levels. So overall, I look back to a good year.
Yeah, I'm going to dig under the hood in the fourth quarter. I see what you're saying about the full year figures, but there's a couple of charts I'd like to go through, if you'll indulge me. Your return on tangible equity in the fourth quarter, whilst your 10% target was attained for the year, that was quite unimpressive at 6.2. What happened there, Ferdinand?
Yeah, I think you should always look at some seasonal effect. For example, we pay the annual banking tax, Dutch banking tax, in the fourth quarter in October. Then you need to look at cost at some incidentals of around 120 million. That was an update in legal fees and some restructuring provisions. So you really need to take those elements into effect if you look at the overall chart of the fourth quarter.
I will, and I'll just do one more on that one. I think you might have half answered my next question. Your cost-income ratio, seriously going in the wrong direction, Ferdinand, at 72 compared with a year ago, or the first quarter, 57. Is that down to those legal and restructuring costs you just mentioned?
Yeah, it's some of the one-off costs, but I think it's also, as I said, the seasonal effect of the banking tax and in general taxes have gone up quite significantly. And number two, you always have the more volatile line in other income. I think it's better to look overall at the full year profits of 2.4 billion and an ROE which is above the 10%. So I think that's a better reflection than look in isolation just on the headline ROE for the fourth quarter.
Ferdinand, it's Karen jumping in. Good morning to you. I want to ask you about the government stake now, very large government stake still in terms of ownership of the bank, and that hasn't stopped you in terms of acquisitions over the past year. You picked up a European neo-broker and, of course, this German private bank that you're talking about in a further update today. But given that the banking sector is consolidating seemingly more rapidly than it has in the past, and just in the most recent 12-month timeframe, thanks to UniCredit, what does that government stake mean? Is it something that blocks you from a takeover? Does it inhibit you from being more active in the marketplace?
No, indeed. I think it's good to see that the new government continues the full privatization of ABN Amro. So the last program, as you say, announced in the fourth quarter last year, to go down from 40% to around 30%. So far, I mean, the government or the foundation holding the shares have been very supportive for ABN executing on its strategy, including the inorganic strategy of bolt-on acquisitions, as you refer to the acquisition of Bucks and Hauff Lampe in Germany. So there's full support there, but it's also a signal with them selling down further that they're confident with the overall strategy. And we have a very well diversified shareholder base. So I also think an increase in liquidity in the shares is a positive signal.